Welcome back, QuickBook users. In this lesson, what we're going to do is get introduced to the chart of accounts, and we're also going to do some journal entries. And we're going to see how we can use that to set up new accounts when we just start using QuickBooks, or if we've been using QuickBooks for a while and we need to make some adjustments to the accounts. So first of all, let's go ahead and go into the chart of accounts. So if you go up to the gear and then select chart of accounts, you'll notice that you first have to click this green button to see your chart of accounts. So since this is a sample company, it's an ongoing business, and you can see there's already an account set up. If you were using QuickBooks for the first time and you needed to put balances into the different accounts that you were going to use for your business, this would be the method that you could use. These accounts are already set up. But what if you wanted to add a new account? For example, what if you prepaid some of your rent, and so you want to add a prepaid rent account? Then we need to add that to our chart of accounts, because these are the accounts that have been used before, but it doesn't include the prepaid. So if we go up to new, I'm not going to import, I'm just going to click on new. So what we need to do is we need to tell it what account type we have first. So we have to do that first. So it says it's a bank account, but it's not. We're prepaying our rent. Even though it's a prepaid expense, and there's the word expense in it, if you know accounting, you'll understand that a prepaid expense is actually a current asset. So what we want to do is call this our other current assets. And then that changes the detail type. So the detail type is going to allow us to create prepaid expenses. Now you can keep the name as prepaid expense. If you wanted to, you could call this prepaid rent. This is up to you for you to customize, and for the description you could put additional information there. Since this is not a sub account, it's going to be a primary account, we'll just go ahead and leave it like that, and then you click when you want this to start. So if you were bringing in all your accounts in to start using QuickBooks for the first time, and you wanted to start from the beginning of the year, then that's where you would put this. You can do whatever month you need to. In our case, we'll just do the beginning of this month. So we'll select that, and then you put the balance that you need that account to start with. So you would have that information already. In this case, we're going to prepay our rent in the tune of, let's say, $2,500. And so now we can save and close it. And we can see here that the prepaid rent account has been added for us. Where did the other side of the entry go? Remember, in accounting, you always have two sides. And when we created this account and put a balance in it, what QuickBooks did was automatically create a journal entry for us. So journal entries have debits and they have credits. Since this was an asset, they debited prepaid rent $2,500. Where did they put the credit when they did this automatic journal entry to help us out? Well, if we go down, it's called opening balance equity. This is where they put it. Now, there are some other things already in there, but if we click on the view register to the right here, you'll notice that you can see where they put our prepaid rent, and there's some other things in there too. For the time being, I'm just going to go back to the chart of accounts. Okay, so now what do we do if we want to make some adjustments to accounts that are already created? We don't need to create an accounts receivable. We don't need to create an accounts payable. But what if we wanted to make adjustments to those accounts? Let's go ahead and look at how we would use a journal entry to do this. So instead of going to the gear and going to the chart of accounts, we're already there, and we don't want to add any new accounts, but we do want to make a new journal entry. So we go to new, and then we're going to select journal entry. And so now what we're going to do is we're going to add some adjustments to these two accounts. So the first account we're going to do is the accounts receivable, and if you start typing it, it populates with some ideas. We're going to use accounts receivable, and we'll put in a random number in there just so we can see it. I'll put 50,000. And you only do a debit or credit since we're increasing our receivables. That's an asset, we debit. We don't have a description, but this is a receivable, so that means it's a customer that owes us. What if we need to put the customer in here? If there's already a customer that we're using, that's great. you would just select it. But if not, we want to add a new customer. We can just type in the customer. I'll just put customer X, and then the type is customer. But we might have additional information on that customer, and that would be input using details. First thing I noticed is they changed the name to first name to customer and last name to X. I just want the business to be customer X. There's no customer. That's not the way the name looks. And then there's other information here. This would be all opportunities for you to populate them for your own specific business. Once we have this done, we can just click save, and we have everything set up. We're going to also do the accounts payable. So that's the opposite. It's a liability. So we'll select that, and it's going to automatically put a number in there that balances out our journal entry. However, we're only going to do 5,000. So that means we're going to have to add another account, because you have to have your debits equal your credits. Again, we could just select a vendor if we wanted to. There's a list of them down here, but we're going to add a new one. We need to make sure we change the type to vendor, and we might want to have some additional details. Again, it made our name weird, so we're going to change it to a business name called Vendor X. Since a payable is a company or an individual that we owe, then that's why we use a vendor instead of a customer. Customers owe us for work we've done, and vendors we're buying supplies from, so we owe them. We couldn't leave this alone if we wanted to. If we tried to save it, that would give us an error. So instead, what we want to do is put the balance, the $45,000, into that temporary account called open balance equity that we used earlier, and we want it to balance out. And then make sure you get the date right. Let's say we'll just keep the date in as it is, and we'll save it. And it says save and new, so that means it'll start a new journal entry. If we don't have another journal entry, though, we could just save and close. I'll go ahead and close the journal entry out. Now you can see our accounts receivable and our accounts payable have both been adjusted for the amounts that we put in there. And we can go down and we can see that open balance equity has a balance of $38,162. This is supposed to be a temporary account. What we want to do is we want to move this account balance into retained earnings when we're done making our adjustments. To do this, we'll do another journal entry. So we'll select new journal entry. Make sure you get the date right. And since it's an equity account, that means it has a credit balance. So we're going to zero out this opening balance equity. So to zero out a credit balance, we're going to do a debit. That'll zero it out. And we don't need to deal with the other areas at this point. And we're going to move this into retained earnings, and it automatically populates it. And then we save, and this time we're going to close it. Now notice that our opening balance equity is 0. If we want to see the impact on retained earnings, just click the Run Report, and we can see the balance has been moved there. So we've gotten everything done that we wanted to accomplish. These are very useful techniques to use when you're starting to use your business in QuickBooks Online and you want to get all your opening balance set up so that you can start from one point in time using QuickBooks Online from that day forward.